Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. What we're going to do today, we're going to switch it up a little bit. We're going to look at uranium. I'm going to give you some of my opinions, financial opinions. Do not take this as advice, to better prepare you for what's ahead. I also talked about I was going off the top of my head, what top five at this current moment could do very well stock wise. And I can tell you what I would look for in a top performing company. And maybe we can do that right now. I've got the companies behind me. We've got the names, the ticker symbols, the market cap, the pounds in the ground, and then the dollars per pound. And I want to make sure everyone knows this. The dollars per pound in the ground does not mean that it's going to outperform. Because you have a good valuation doesn't mean that that will be the best performer. And just because they're at a certain spot, and just because they have this project that's real close to production, doesn't mean they're going to be the best performer. That's the artwork. The artwork is knowing how to basically, the way that I'm doing it is I know that this uranium area is going to be one of the highest performing sectors based off of history. All the energy sectors usually perform the best in these commodity bull markets. They're always towards the top. And if it's going to be the best, rather than trying to pick a few companies, I kind of just bought everything that had good value. The company, in my opinion, that's going to do the best in this next bull market is one that people had viewed as a company that needed too much money, or a company that it had some sort of problem that people mentally tied around it. They said, this is going to have a problem. And then they priced it as such, which means they priced it all the way to the cheap end of the area. Now, remember about adding value to shareholders. The company itself has to add value. And there's really two big areas that companies add value to the shareholder. One, they find something. So I think the largest returning company will be the one that finds the biggest deposit during this bull market. So that one, it's going to be very tough to figure out who's going to do that. And maybe there's a couple that do it. And the way that you can structure a portfolio to capture just one of them doing it could give you a whole 100-fold increase. Having that one company in your portfolio could completely transform the portfolio. But it's hard to speculate on which one's going to find something, or which two or three or however many find something during this next bull market. The other portion that adds value is going from a developer to a producer. You gain shareholder value when the pounds get revalued in the ground during that time frame. And it's very difficult to find something that would be a great, how can I say it, a great investment, because there's a couple of things that people, it's almost like two opposite things when you think of this situation. You can think of a very small deposit that has low production and that adds, throws out a few million pounds a year, but they'll say it doesn't take much capex to bring it into production. Well, it doesn't produce that much though. And then you've looked at the other ones that have a lot of capex, but they produce a lot, like a Next Gen Energy or a Bannerman. Are those better? It's a good question. I don't know. If I were a utility, would you want to go to a large one, or would you want to go to a real small one? More than likely, you'd want to go to the large one if you have a fleet of nuclear reactors, if you want to contract with somebody. So you can go to one place and say, I've got 5 or 6 or 7 nuclear reactors. Let's go here. And Next Gen, I mean, they can pump out a whole bunch of uranium once they get going. Some of these other ones they're pretty small. So I took kind of a different approach. I kind of grabbed a little bit of everything. Anything that had good value, I grabbed it. So the ones in the red here, I looked at dollars per pound. I looked at management teams. And really what I ended up going into is what has low risk, operationally and technically lower risk. Now, I mean, not super low, but lower. What could pump it out and like pump in terms of lots of production per year. And I didn't worry too much about the CapEx it took or was required to start the project. That's the way that I took my look at things. And then I put in a little bit of money in all of the exploration companies. It wasn't a ton of money. You only need a little bit that gains a ton. So I think next gen energy was a good one to go into. Yeah, they're priced a little bit more expensively right now, but they have a monster deposit that I think is a little bit easier to mine. So that one, I was like, I got to get in that one because that seems to be the best play with the lowest amount of risk. I would even say it's got less risk than Camco. Camco has a couple of mines that have already flooded before and multiple times. Paladin Energy, I mean, you guys, I know you like Paladin, but Paladin is basically the same price as Next Gen. And Next Gen, I think, is a better deposit. So why would I go into Paladin if I could buy Next Gen? And guys, this is just my opinion. I could be completely wrong. You're paying a premium for it. I never really got, really drawn to that one. DNN, you're paying a premium, kind of a premium for it. UEC, it's just up there. Now, Global Atomic, you're not really paying a premium for it. I like that one quite a bit. So I dumped in a lot in my original investment in Global Atomic. Fission's another one that I don't think you're paying too much for. I think it's an easy to mine deposit. Why not? I figured why not? I'll throw some money into it. LEU, I don't know as much about LEU. Boss Energy, I know a lot of people say, well, what about Boss? Boss, you're paying $11 a pound. I can pay $3 a pound with Global Atomic, which I think is right there as well. Which means that Global Atomic can go up 3x to get to the price of Boss Energy. They can do a 3x and then be at the same price valuation. Is it going to outperform? I don't know. That logic could be flawed. URG also $9 a pound. Then you come on down. ISO Energy is getting priced quite expensive for the deposit. And I don't know how big that deposit is. It could be a monster. It is in the sandstone area a little bit. But I only have a little bit in that. Encore Energy is one I overweighted because Bill Sheriff, the CEO, he's a good guy. Knows what he's doing. He's picking up pounds. He's doing, mergers. He's buying value for the shareholders, and he's done this before, and he was successful last time. So I overweighted that management team. Deep Yellow is another one. They are incredibly cheap right now, and they've done it before. That's John Borshoff, who did Paladin Energy last time. So I figured, well, why wouldn't I bet on him? I overweighted Encore, Deep Yellow. UEXCF, I do own this one. It is cheap. We'll see what it does up in Canada. Forces Metals is also one that I think is incredibly cheap. And some of these ones over in Namibia last time has Paladin Energy. And we have a guy, Deep Yellow, John Borshoff, who's done it before in that country. And we've got other people who have projects that are pretty well, we'll call it, pretty well developed technically, that are basically just waiting to turn it on. Bannerman's one of those. And Forces Metals, I think, right there, Bannerman's right here. They are all incredibly cheap. And if they can add value by developing those projects, and that's one of the easiest countries to do it in, I viewed that as a least risk way or least amount of barriers to get moving. I kind of overweighted that. We also have Goviax down here. I know they're in a little bit different country, but they're so cheap. I'm like, let's go for it. They also have a decent sized projects. They got 2 of them. I figured, why not? Why not get in there? And the charts technically on a lot of these, they were all stuck at some resistance level. So it kind of held the value down for a little while longer to accumulate. So that all kind of factored into it. There's Vimy, and I don't know much about Vimy Resources. It's priced, decently. Laramide's priced very well. I bought that at a very good price, so I put some money into that as well. It's kind of a laggard. And then I bought all these companies down here that are more exploration type companies. And I kind of just put a little in each. If somebody hits something big, then you know what? I'm riding it. So I've got a twofold approach here. One, I'm not trying to necessarily speculate on who's going to be the best. I mean, I did a little bit. I overweighted them. But I got some money in the ones that were, at least what I think, are the best value based off of the dollars per pound in the ground. Doesn't mean that's the valuation metric that will tell us what company is going to do the best. It might not be that metric. It might be something else. And what I do think is I don't know if these guys can be the best performers if you're already, we'll call it, very heavily priced. Your risk goes up if you're a developer and you're being priced like a producer. Because what value, where are you going to get that value increase? You're already priced like a producer on some of these. The US ones are priced quite expensively, and I didn't want those investments. As I didn't put as much money in them, put it that way. They could be good, but they're priced quite expensively. And what I'm looking for is something that was mispriced in the beginning, and then people are going to view it completely different. The company adds value to the shareholders, and they really bring that price up, upward. And we do have Paladin Energy, which is a producer, getting priced at $8.72. Let's say Bannerman does very well, and what's going to happen is that price that was originally, it was all the way at like 19 cents a pound when I was first buying it. And now it could be priced all the way at $9. And that's the premium that you get for going from a developer to a producer. At the same time, you're going to have the uranium price go up when this is all happening. I don't think the window, I'm going to start speculating on some other stuff here. I don't know I think the window is going to be a lot bigger of opportunity for these companies to be successful. I don't think the window is going to be incredibly small like it was last time. Because of the deficits and how long those deficits are and how big they are, I think these guys are going to have to go into production. I don't think it's going to be a blip. Now, the price could spike and come back down, but I think it'll go back up eventually when we need the uranium. It has to go above the cost of some of these mid to high cost producers. So I think the price could, it depends very heavily on money flows. And what Sprott is, it's a financial entity that it's somewhat artificially putting the price up, somewhat. What has to happen if the price is going to go up and remain elevated? We need a continual flow of money into this sector continually, and it needs to continually feed it. If money pulls back out, we're going to see this huge spike come down, and it's going to be very volatile. Over the long period of time, because of the supply-demand characteristics, because of the market conditions and the inflation that's coming, I think, with an expansionary phase of real estate in America and the demographics, I think it's going to remain elevated, and it has to remain above the high-cost producers at some point if they're going to produce this stuff. Where is that point? I would say it's probably $100 a pound of uranium. It's probably going to be somewhere in that range and go in the low 100s to 80 to low 100s to 80, like cycle somewhere above the high-cost producers. Problem is, that's if you have a stable supply-demand balance. We have a long gap between basically now and when a lot of these producers are going to start producing. It's a ways out there. You're talking many years. So we're going to have all this money shift and turn at some point. I can't tell you when, the exact moment. Because of interest rates going up, it's going to turn and shift and go towards these sectors. It's going to be a big, huge amount of money. And I can't tell you exactly the timing of all this. And it's going to run at these companies, and I think it's going to create a huge spike. It's going to have a huge spike in the spot price, huge spike in the companies, and then I think it's going to come back down. It's going to stabilize at a much higher level and then start to move up again after the big spike. I'll call it the big spike. The financial money flowing into the sector causing this big spike. So I think, looking at this, the way that I positioned, I kind of positioned in what I thought were kind of the higher cost producers that people they didn't like them as much for whatever reason. And I kind of overweighted those. And I took the ones with the least barrier to entry in Africa. So those are the ones that I basically overweighted a little bit. And then, looking at this dynamic of uranium, I think we're going to get a big spike. It's going to be incredibly volatile. And the way that I'm viewing it is I'm going to ride through it. I'm not going to trade in and out. And we're going to have some periods where we could consolidate for a little bit between here and a top in the stocks. I don't know what the physical price of uranium is going to be. Maybe it goes straight up like it did last time at a pretty good clip. And the worst thing you can do is follow your emotions. Like, try to be emotionless. Buy what is of good value or what you think is good value. Be ready to get a 30-40% haircut in any second because this is getting more volatile. When volumes and money flows go up, things get shifted around real quick. So be ready for big volatility. You're going to have to see your portfolio and be mentally prepared to see these big swings. And that's why we're here. We're in uranium because it's volatile and you get the big swings. Because when that volatility lines up in your favor, you're going to see some big moves to the upside, which we've already seen. This is, I think, kind of the beginning of the big move. So you got to be ready to weather moves that are really, really big. And you got to be prepared mentally when your account gets larger and larger to see this volatility be massive. So I just wanted to go over this stuff. I think if you're going to look for the best producer, or the best performer, I should say, not producer, performer, it's probably going to be an exploration company that finds something big. I don't know which one it's going to be. And it's going to be a developer that's priced cheaply, that's waiting to go basically and build their project and successfully builds it. And for some reason, I'm just more inclined to go after these cheaper African ones. And those are the ones I overweighted. If you guys like this content, give me a thumbs up. I don't know as much about the Australian companies. Otherwise, I'd put them all in here and give you my opinion. Let me know what you think in the comment section. Who's going to perform the best during this bull market, and why do you think that? I'd always love to hear, everyone's opinion, because I don't know everything here. I'm just throwing out my opinions. If you put something in the comment section, maybe I'll do some further research into it, and maybe I'll add it into the portfolio. I am always inclined to start looking at other people's suggestions and what they think, as I've added a lot of companies that people had suggested on the channel, and my portfolio has done better because I'm willing to listen to you guys. I'm pretty open. So let me know what you think in the comment section, what company or couple of companies that you like and why you think they're going to be the best companies during this next bull market. Subscribe to the channel if you haven't. Don't know what you're waiting for. Join our community. Let's ride this thing up together. Let's bounce ideas off each other. And, thank you for listening. This is Finding Value.